over to you, Mrs. Okay. Please, would like you to tell us about yourself.
Okay, my name is Okay Okunfalami. I am a wife and mom of two boys. I studied economics and statistics at the University of Benin, and I went ahead to get an ACCA qualification. I currently work as a business analyst, and I've always worked in financial services. In addition to that, I own a fashion and clothing business here in Edinburgh, and I've done this for about 10 years now. My hobbies include singing. I like to sing a lot. Traveling. I like meeting people and going to new places, watching movies and reading books. So that's pretty much me.
Okay. Okay, so can you just tell us why you decided to go into the profession you're having right now?
Okay, first of all, I've always loved working with numbers. I'm really good with maths. I don't have any problems with maths at all. So I found that pretty early in life. And in addition to that, I love analyzing data and information. Then beyond that, I like, helping people, like working with people and helping them make sense of data in such a way that they can solve business needs and problems. So that's really informed my choice of a career. So I've always been in financial services, and I always like to be in a position where I could help people solve business problems.
Okay. So what accounting software would you say you're familiar with, you've used?
Okay, so I've worked with a number of softwares and a number of businesses as well that use some of the softwares I'm going to mention. And some include Sage. Sage is a really popular one. Another one is Xero,
Okay.
Xero, and then there's Pegasus Opera and QuickBooks. So these are like four of the main that I have actually worked with.
Okay. Do you want to share with us which you recommend for businesses, for small business startup? Which do you recommend that we can use?
Okay, in terms of a choice of accounting software, it'll be based on your business needs and what you really want to get out of the accounting software. For example, Sage, for instance, is very popular and it's used by established businesses. So if you were to deal with financial advisors, accountants, if you mention Sage, it's something that they are familiar with. So if you're thinking of something that everyone knows, Sage would be it, because Sage also helps simplify a range of complex accounting procedures. So if you're looking for that, then that is for you. However, there's another one that's kind of like built for smaller businesses, and that's QuickBooks. It's focused on small businesses. It's really easy to use, and I think personally it's a software that was designed with the end user in mind. So I would suggest if you were starting up a business, QuickBooks would be it, because I understand you can like take screenshots of your invoice and then just input it, and then it does everything for you. Yeah, so that way you don't worry about all the complex aspects to accounting. So I would say QuickBooks.
Okay, I know that some people have asked that, okay, I have a business. What is the importance of accounting in my business? Because not everybody that understands what accounting does in a business. So I want you to shed more light to us, to educate us and tell us that why do you think accounting is important in our business?
Okay, first of all, you even want to find out the purpose of accounting. For starters, accounting will help you keep good business records. And if you even want to be taken seriously as a business owner or as a business for that matter, you should have good records. So that would be like the starting point. If you don't have your records right, then nobody would take you seriously, really, in the world of business. It would also help you keep track of your income and expenditure, see how much is coming in and what is going out, and see how well you are doing at any point in time. So if you wanted to see, okay, am I in a deficit this month? You can look at your records and it will tell you immediately. You can deduce how well you are doing at a point in time. And then beyond that, it can help you track business performance over time. So like you can establish trend. So for example, if you've been in business for 2 years or 3 years, you can then track your performance. Like, okay, in the first year, I made a loss. Or the second year, I then managed to break even. And by the third year, the business has started to pick up. I'm now making a tidy profit. So it can help you, like see the trend over this and have a general overview of your business performance. In addition to that, it can assist you in making sound business decisions. For example, if your business was struggling, there are certain investments you would not want to make, and you can only get that information from the records that you have kept using accounting. Another one I put was that it is good for investors. So if you wanted to take your business to another level, you would present these records to investors or the financial institutions. If you don't have records, nobody would even, consider whether you want crowdfunding or venture capitalists, whatever form of investment you want in your business. It would be good to have accounts put together. Again, back to the first point, nobody will take it seriously if you're saying you want an investment of maybe like a significant amount and you don't have records to show for it. They can't track your business performance. And so for all these reasons, it's really important to have accounting, a software in place, or even basic accounting generally as a business owner.
Okay. So another thing I want you to clarify for us is that what are the common errors that we make in accounting?
Okay. Well, first of all, in accounting, you really need an eye for details. You want to pay attention to you want to be able to pay attention to details, because that's what makes the difference between good records and records that have been poorly kept. So there are a number of records that you even want to keep, for starters, like information about sales, purchases, inventory, receivables, and the like. But if we're talking about accounting errors, one of them would be an error of omission. So this would be where you forget to enter a transaction. And you find this kind of thing happening where a business operates a petty cash system. So if I were to explain this further, imagine a business where you take cash payments and you take check payments or payments using cards or bank transfers, and then some payments come in by cash.
Okay.
Picture in your mind now, like if you had cash in a till and you had to pay a cleaner from that cash, there's a chance that might not be recorded, and in that case, that would be an error of omission. So that is where you have forgotten to enter a transaction into the records. Another one would be an error of commission, and this would be where you've entered the correct amount into the correct type of account, but it is the wrong account. So, for example, if you sold or maybe you received a payment from a customer, say 5,000 naira. You've entered the correct amount, 5,000. You've entered it into a customer account, but you've entered it into the wrong customer.
Okay.
That would be an error of commission. Then you've got what we call transposition errors. So that one is where numbers are reversed. So for example, you had 2,160 naira, and you've written it down as 1,260 naira. You can see what that can result in. It can understate maybe your profit or overstate your sales, whatever. So it's just the numbers moved around. That's one of the errors. And then another one is errors of reversal, where you've put in maybe like a debit entry instead of a credit entry. So this is not like an exhaustive list of errors. These are I've just listed 4. There are a lot more, but yeah, 4 for now.
Okay, we've always been hearing about accounts receivables and accounts payables. So I don't know if you can help us buttress to understand what the difference is and what it also does.
So accounts payable, that refers to the money that the business owes its suppliers for goods or services that have been bought on credit. So your creditors, if you've ordered a certain number of items and you haven't yet paid them, that will be referred to as accounts payable, and you will report this on your balance sheets under current liabilities. The opposite of that is accounts receivable, where it refers to money that is owed to the business for goods or services that the business has now provided to its customers. Again, this will be recorded in the balance sheet, but under current assets. So whereas one is an asset, the other one is a liability, and one is a situation where you owe the customers, which is the accounts payable, and then the other one is a situation where your customers owe you money, accounts receivable.
Also, we also know about bank reconciliation. So please, can you also let us know how bank reconciliation come in place in the business?
Okay, so bank reconciliation really is simply comparing your bank records with your business records. So the balance on your bank account compared to that you have reported on the bank statements. You want to check if there's any discrepancy and get to the root of it. So the importance of bank reconciliation really, the first one would be to see if they are, to keep track of any errors. So if there's a discrepancy, it could suggest that there's something that is wrong somewhere. So it could be an early warning sign, that something is seriously wrong. It could be an easy way of detecting fraud as well. It could also be another way to track checks that have bounced, because that might be the reason for the difference. It's also good practice, because if you think about it, if you have a business and it's established, you'd have external auditors coming in. It would be good to do this yourself regularly, say like on a monthly basis, because it's one of the testing procedures that external auditors would carry out. So it's good practice for any business.
Okay. Now, we also want to know more about tax liability. So what would you have to say about tax liability?
Okay, so if you're putting it simply, your tax liability is the amount a business owes the taxman or the tax authorities at the end of a tax year. So you're carrying on in business, you're making sales, you're making profits. At the end of the day, or at the end of the tax year, there will be an amount that is due to the tax authorities, and you would usually calculate that by applying the rate of tax in whatever country you are. So depending on where you are, say for example 20%, like if it was in the UK, the basic standard rate for VAT would be 20%. So applying that 20% to what you call taxable income. So for example, if it was 100,000, 20% of 100,000 would be 20,000. So the importance of getting your tax liability right and its impact on the business is that, you know how you can be in a business and you can be carried away, or you can focus on the core aspects of your business. It is also important to keep on top of your taxes, because a failure to do so can have far-reaching consequences. So in as much as you are focusing on the core of your business, you want to make sure that it is balanced through and through. You want to make sure that you are meeting your liabilities under the regulations in the country that you operate in. Because if you don't do that, you could incur penalties for defaulting. So if, for example, you came to the end of the tax year and you have amounts outstanding by the date the tax is due, and you haven't paid that, you would have been seen to breach the tax, let's say, regulations, or whatever is required of you as a business, because you are required by law to do this. So if they were to come and the authorities were to come and carry an audit or check, you could incur penalties and interest for that. It could also result in cash flow problems, because as you can imagine, if you were to picture now how possible it would be for someone to default in 1 year, say the 20,000 that we've said, and then another year, another 20,000 or a certain amount. If that were to go on for a period of time, and it turns out that you now have to make good on that liability, it could impact negatively on your cash flow, because you have to cough up a huge amount of money at a certain time and under short notice usually. And then in extreme cases, based on them cash flow problems, the business could even go out of business. You get, like, if you carry on like that and you have to pay a substantial amount of money, it could impact negatively on the business. So while you want to focus on getting the business right, you also want to be mindful of meeting your obligations in terms of your tax liabilities.
Thank you so much. We want to really appreciate you for clearing all this. We really appreciate, and I believe that someone will need this information to understand the importance of having our accounting rights in our business. Thank you so much.
I really hope it was useful. Thanks for having me. Thank you.
Thank you all our viewers. Really appreciate. Thank you. All right then. Bye-bye.
Bye.